Welcome to this webinar organized by SolarPower Europe in collaboration with GET.invest on financing solar IPPs up to 50 megawatt and C&I projects in Africa. Next slide, please. My name is Mate Heiss, and I am Head of International Cooperation at SolarPower Europe. It's my pleasure to be the host of today's webinar. This is the first webinar of SolarPower Europe's freshly launched digital series, Shine On, with which we will keep you up to date with the latest business and policy intelligence shaping the solar industry through regular podcasts, webinars, and executive interviews. A short introduction on behalf of SolarPower Europe. We are the European Solar Industry Association, and our mission is to create business opportunities and shape market conditions in favor of solar in Europe and beyond. We're actively engaged in emerging markets also outside of Europe, and it is in this context that we partnered with GET.invest to mobilize renewable energy investments in Africa. So in the last webinar that we organized together with GET.invest in February, we got an overview of GET.invest's different activities and service lines aimed at mobilizing renewable energy investments in Africa. And in today's webinar, we will deep dive into one specific service offered by the European program, the Finance Catalyst. The presentation of the Finance Catalyst will be followed by a Q&A session, and participants can use the control panel on their right-hand side to post written questions to our experts. So feel free to already think about questions during the presentations and send them through the control panel. In my role as moderator, I will read them out in the Q&A session. So it is my pleasure to welcome our experts, Javier Ortiz de Zuniga from GET.invest, who will start with giving us a brief recap about what GET.invest actually is. And then his presentation will be followed by a presentation by Mark Hankins and Ed Denkers, two seasoned renewable energy experts of the Finance Catalyst with more than 25 years of experience each in project development and finance in Africa. They will guide us through the Finance Catalyst services, how to apply for support, etc. And they will also show us a few success stories of the Finance Catalyst. So to all our experts, thank you very much for accepting our invitation to today's webinar. Javier, over to you.
Thank you, Mate. It is my pleasure to be here this morning. My name is Javier Ortiz de Zuniga, and I'm a technical advisor at GET.invest, managing specifically the GET.invest Finance Catalyst facility. For those who did not make it to the previous webinar, which was about 3-4 weeks ago, as Mate pointed out, the title was Mobilizing Renewable Energy Investments in the Africa, Caribbean, Pacific regions, which can be viewed on SolarPower Europe's YouTube channel. I will give you a quick run through of the GET.invest program and its different services before our GET.invest Finance Catalyst advisors, Ed and Mark, run you through the core subject matter of today's webinar, which is financing solar IPPs and C&I in Africa. So I'd like to start off with this quote, which might sound a bit cliche to some of you, and some of you might have seen it already several times in the past, but it nonetheless holds true in our experience and what we see out there in the market. Funding is and remains available for renewable energy emerging markets, but project preparation is often not meeting the necessary requirements to make it through due diligence processes in order to tap into equity or debt financing, meaning bankable projects are often lacking. So I'll start off with what is GET.invest. GET.invest is a European program that aims at mobilizing investments in decentralized renewable energy projects. It supports private sector business and project developers, as well as financiers and regulators, in building sustainable energy markets. In doing so, we contribute directly to SDGs, in particular SDG 7, as well as climate change objectives of the Paris Agenda, the famous NDCs, nationally determined contributions. The program GET.invest was launched in early 2019, and it's building on its predecessor, the Africa EU Renewable Energy Cooperation Program, while further streamlining its advisory portfolio and extending its services globally. GET.invest is hosted on a multi-donor platform called GET.Pro and is implemented by GIZ, the German International Agency for Cooperation. It works on delivering on priority initiatives of the European Union and its member states, and is supported by the European Union, Germany, Sweden, the Netherlands, and Austria. What is our approach? Well, we have GET.invest has an extended geographical focus beyond the African continent in comparison to the RECP. We're now working also across the Caribbean, and the Pacific region is currently under preparation. As you can see in the slide in front of you, the services of GET.invest are structured into two broad areas, which logically flow into each other, and one feeds into the other. That's specifically private sector mobilization feeds into pipeline development, which are the two large building blocks of the GET.invest program. So the first area, private sector mobilization, really aims at generating additional project ideas, whether it is by offering market information, which is one of the services in that block, which is basically offers a pre-feasibility stage data on certain market segments or geographies across the regions that we cover. This content is downloadable directly from our website. We also, another one of our service lines is empowering industry associations, or we also do sponsoring of events and organizing B2B matchmaking sessions. B2B matchmaking sessions are basically speed dating setup style type of sessions at those events. These the services in the action area called pipeline development that you see on the right of your screen, the right block. These really are the gearbox between the market and the financing instruments. Coaching and advisory provided to project developers is provided to project developers through the so-called GET.invest Finance Catalyst, which is really at the heart of the pipeline development support area that we offer at GET.invest. Along this, and I will be going a bit more into the details in my next slide on that. But before I do so, I'd like to go over as well the other two service lines in that block, which is project documentation development and PRCD, which is pipeline-related capacity development. So project documentation support service, which will be going live in 2020, hopefully, is one of the other services. And the reason of this service going live now is because whilst we know that advisor services have proven, so finance catalyst type of services have proven to be extremely valuable over the past 3-4 years, we do also find that they are sometimes in themselves insufficient to conclude finance acquisition. This is also due to the fact that the financiers are requesting specific studies or documentation, such as, for example, tariff studies or environmental impact assessments that are to be submitted in order to make themselves a final decision. In many cases, we note that the developers lack the resources to hire the necessary external consultants or experts to conduct these studies and deliver quality documents on the level requested or needed by the financiers. This has in the past, in our experience, led to projects being significantly delayed or even projects failing due to the incapacity of the developers to mobilize funding and or resources to obtain these documents. So really the GET.invest project documentation development service support line will plug this gap as it offers to provide projects with this direct support in compiling these documents. And then finally, as part of this pipeline development block, we also have the PRCD, so the pipeline related capacity development service line. And here, basically what we do is we can offer trainings both to public and private sector And when it comes to private sector, it's mostly to private sector developers and companies, and for things such as, for instance, to prepare project proposals or providing on-the-ground training on finance strategies. So the illustration you can see on the screen shows how ideas really mature towards bankable projects through early and late stage, and how the support activities of GET.invest relate to the development stages. How basically GET.invest interfaces with financiers which enter the process during the active development stage. So really, GET.invest Finance Catalyst at a glance. It's very important to know that our facility is an honest broker. We offer honest broker advisory to projects and business developers. What that means is that we're not married to anyone out there. We offer the best possible advice only in the interest of our clients. Our success indicator is AFI. What that means is meaning your project has been taken up by a financier. So your project is part of a financier's pipeline. How does it work? So if we can move to the next slide. There we go, thank you. We offer an a la carte menu of support services, which are structured around 4 main levels. They don't necessarily follow each other, so you can really pick in accordance with our lead advisors once you have been selected for support, which one of the services really fits your needs. If just one or several. Most often we do have the case that 1, 2, 3, or 4 services are required. Obviously, I would say currently statistics show that finance access support, so level 3 service, is the one that we're getting the most requests for, and actually also structuring support. The investment strategy level service 1 is basically, I'll give you some examples. This is about reviewing and assessing existing written documentation that you may have, review and assess your business model, and assess the commercial viability and bankability of your proposal. The second level, structuring support, we really look at how we can improve your project bankability prospects. We advise on sources of development capital, and obviously if you're a later stage, we can also advise you on capital structure for the project. And here really the main offer that we have under this service level, under this structuring support, is assist you in developing your financial model. That is really one of the highlights that we do have currently on our menu, and that we do note that financial modeling is currently lacking. Proper financial modeling is currently lacking in the renewable energy markets, yeah, it's one of the most intensive, labor-intensive services that we offer. Level 3 is finance access support. And here we do things such as prepare a funding strategy together with you. We assist you in the preparation of equity and debt provider documentation. And we also help you to generate interest amongst equity and debt providers, who basically help you to connect to the right financiers, depending on what type of equity or debt you're looking for. And finally, level 4 is transaction support. And here, basically, it comes down to providing you assistance in the contractual negotiations during project preparation and business development. We do have a very transparent application process. So applications are really received through what we call a level playing field intake. We have an apply here button in one of the tabs on our website. We will show you the direct link at the end of the presentation to that, so that you know where to be routed to. We also have a tab on our website where you can view the Finance Catalyst eligibility criteria for support. The GET.invest Finance Catalyst support is available to all applicants that meet this criteria. We work with application rounds of approximately 3 weeks each. Our next round is actually closing tonight on the 8th of April, but do not worry, there will always be a next round. The one thereafter is, I think, more or less 3 weeks later. And basically there will always be a next run after that one if you miss this once. We're practically open 365 days a year. It's just that we work in rounds or batches, if you will, so that we can organize ourselves better. There is also a link on our website which will take you directly to the application form, where it says basically apply here for our services, and where you first need to register as an applicant, see what information is required, and then that will take you to an application form which is composed of 25 to 30 questions, and it should not take you too long to complete the application form. After the close of an application round, your application form will be reviewed by 2 independent Finance Catalyst advisors, which will give a score to your application. And this usually takes a couple of weeks, 2 to 3 weeks. The experts base the review on your application form and the attached documents that you've provided. Therefore, it is recommended to include as much detailed documentation as possible. And for that, we do have a minimum requirement that you can provide us with at least a basic financial model and a business plan or a pitch deck. Then, as I said, we will get back to you with feedback once the review process has been done with either a positive or negative reply. If it is a positive reply, you will have a kickoff call with the lead advisor that has been assigned to you, and you will define further the scope of support. And once this is agreed by both parties, the support can start. If you are rejected, we will provide you with constructive feedback as to the reasons why you were rejected, and you always have a second chance to reapply. Yeah. I do also want to point out that even though our KPI, so our key performance indicator, is AFI, accepted by financiers intake, we do often continue supporting our clients towards financial close. Yeah, so with that, I'd like to finish my part of the presentation. And if we can move on to the next slide. Yes, and I'd like now to hand over to our advisors, Mark and Ad, that will deep dive into the subject matter of today's presentation. I think Mark will start with the C&I sector. So Mark, over to you, please.
Good morning. My name is Mark Hankins. I'm coming to you from Nairobi. Nairobi, we're also quarantined. I think Kenya has less than 200 cases of COVID, but this morning we found out 17 of our MPs have COVID. So so things are beginning to get hot here. Anyway, as I said, I'm coming from Nairobi, and I'm going to talk a little bit about the C&I sector. I've been working in solar in East and Southern Africa for over 25 years, and I've got quite a bit of experience helping clients do C&I projects, but also executing C&I projects myself. Let's see if I can get to the next slide. There you go. C&I solar PV projects are the largest group of projects that receive support from the Finance Catalyst experts. We're 25 experts from a number of fields, but we have 35 out of our ongoing 65 to 70 projects are solar, and they include mini grids, C&I, IPP, and PAYGO activities. So we're going to focus in on the C&I and the IPP activities, and you can see there's a photo there of one of the Rwanda, I believe, 810 megawatt project, and then there's a C&I project in the center of a public sector building in Kenya, put in by a large public group. So C&I and IPPs in Africa have been moving forward quite rapidly in the last 5 years. As we know, there's an excellent solar regime. I mean, right now, if you look at the global solar installation, Africa has about 1% of the total installed capacity of solar. So despite the large solar, the opportunity is growing. Solar has a lower cost in a lot of countries, especially in countries in West Africa, where it's based, where the grid is based on generators. Uganda, electricity is quite expensive. Rwanda, electricity is quite expensive. Kenya, electricity is, relatively expensive. 18 cents for household consumers, 15 cents for industrial consumers. So solar costs are lower, and people are beginning to move into solar because of the lower cost. Reliability is a really big issue. Utility power is poor quality and is often unavailable. Client I'm working with averaging 1 day of no electricity per week. So companies often must self-produce power, and that adds another dimension to the needs of C&I in Africa, that the C&I has to either match and be able to partner with generators, or we have to bring in battery-based backups, which is actually, we're beginning to see the first battery-based backups coming in. So improving technology, PV, metering, being able to report, storage. So with improving technology, we're going to see solar begin to take off more and more in Africa. And business models are key. Because unless there's a way for companies to invest in solar, and upfront investment is difficult for most companies. So unless they can lease, or unless they can have some type of financed agreement, they aren't going to invest in solar. So business model is everything, and a lot of the players in the market are coming in with leased or financed solar. And demand for green power is on the agenda of a lot of large companies. To give an example, the flower industry in Kenya. Kenya, before COVID, was a huge exporter of cut roses to Europe, and a lot of flower farms wanted solar because their clients wanted to see them as green, and solar is a great indicator of green practice. So what's the status? Well, we see a lot of in C&I markets. We see a lot of solar installed by companies, public buildings, developments, and also in the mining sector, on the consumer side of the meter. And the reason companies like this is because they don't have to deal with utility. They can put the solar in on their side of the meter, and they can take the savings on price of electricity right off their bottom line. In Kenya, we're seeing that the savings aren't as large as expected in a lot of solar companies, but I think we're getting better at that. There's a Bloomberg report which you can get a copy of, and it identified that much more than 100 megawatts of C&I has been installed in Africa since 2015. I think it might be 200 megawatts. I don't think the report captured everything, but in countries like Kenya, it's 20 to 25% of the market per year right now. So Kenya, in the last 3 years, we've seen 35 up maybe 40 megawatts of C&I installed for industry, flower farms, tea sector, etc. It's mostly being done through a leasing and rental market for industrial customers. So very few companies are taking the responsibilities themselves. The companies that are investing, they want to outsource the management of the solar systems. They are not so interested in having to deal with another power source because they already deal with their generators, so they don't want to deal with a solar system. So most of them are interested in outsourcing it unless they're very, very large. And the market compared to Europe is small, but it's growing rapidly. Active markets. The study, the Bloomberg report lists Nigeria, Ghana, and Kenya as the most active markets. Of course, South Africa is quite active, but I would say that the market is waking up in a lot of countries. I was in Uganda a few weeks ago, and we're beginning to see a lot of interest in C&I in Uganda. So C&I is something that a lot of people are interested right now. A lot of companies are taking it up. So it built out of Kenya, but it's moving Tanzania. Where you won't see active markets is where the cost of electricity is very low. Ethiopia, for example, where electricity costs are very subsidized, then there's less market development. As I mentioned, Kenya has over 35 megawatts of embedded solar, flower farming, tea, malls, public institutions, but we're also seeing a lot of embedded solar in other countries where there's mining sectors. Nigeria, I'm not an expert on, but there's rapid growth going on. Ad Dankers might be able to say something about that when he comes on. Other markets are developing rapidly, as I mentioned. One project that I'm working on right now as an advisor, an East African public institution applied to the GET.invest Financial Catalyst because they had already done a pilot solar project on their campus, and they wanted to install a much larger embedded solar system, several megawatts of solar on their campus, that they could offset their power costs and offset their bills for other locations. So they're seeking support from us to build a viable business model and develop a cooperative approach with suppliers and develop a funding strategy which can enable them to identify financial and technical partners. So the activities that I'm working on with them right now is assisting development of a business and financial model, assisting in the completion of regulatory process. Of course, because solar is so new in many African countries, the regulatory hurdles are not insignificant, and helping them to identify project partners, whether it be financiers or technical partners. Next slide. The challenges that we see in the sector is that C&I is at a pioneer state in many countries. So it's very new. So when you're introducing solar, it's where it was in Europe 10 years ago. Quite often you're introducing a new technology to often skeptical people. Many groups view solar negatively because they've seen a lot of failed solar projects. So it's in the pioneer status. We're building the reputation of solar. And then in other countries like Kenya, South Africa, there is intense competition and a lot of players trying to go after a relatively small number of markets. So the overall base of customers is quite small in Africa. It's economically active, and in many countries, the economically active companies are. So for example, in Kenya, 8,000 clients use 60% of the utility's power output. So you do have a relatively small base of large customers that will be taking up over 250 kilowatt C&I projects, but there is a much larger group that's going to be interested in smaller C&I solar projects. But then again, that's a little bit different business model. Thirdly is the debt financing bottleneck. Finance sector is largely absent from the C&I market. So companies, even the local players that are trying to do C&I, they don't have deep pockets. So the clients don't have deep pockets. So if companies that have deep pockets and they can come into the market and offer debt to to either their partners or to the clients directly, this is needed. And then the other problem is the oversupply of power in some countries. This is reducing the appetite for players to supply solar because the potential of net metering or power selling extra power to the utility is much reduced. If you look on the right side, you can see that the economics. This is from the report, the Bloomberg report, which there's a link so you can download that. The economics for solar in Africa are really improving in Africa, and we are going to see a continued growth in the sector. I see good business in the C&I sector. I see in brief, I see it's going to grow, and this is going to be a sector that's going to continue to get interesting, especially in the new countries that are going to open up shortly. I believe I will hand over to Ad now.
Thank you, Mark. Let me try to get to the next slide. There we go. Good morning, everyone. My name is Aldarken. I normally operate out of Johannesburg, South Africa, but due to the crisis, I'm back in Europe waiting it out. Hopefully this is going to pass soon, not only here on this side of the world, but most certainly also on the African continent, where people are a little bit more vulnerable than on this side. I'll be focusing on the work that Finance Catalyst is doing on solar IPPs, independent power production. Basically, what we're doing is straightforward, putting up panels and connect them to the grid, basically feeding them into the grid and get paid by every unit sent into the grid. We're looking at the smaller sizes. The typical size we work with is anywhere from 10 to 25 megawatts, can go up to 50 megawatts, but currently we see in our portfolio that we're mostly looking at the smaller size projects, which have got its own characteristics and challenges. And also there is a rationale for the smaller size to start with. Activities where we are geographically present: Burundi, Chad, Guinea, Kenya, Lesotho, Malawi, and Zimbabwe. And you see that South Africa, although a lot of work is being done on IPP solar, is not included in our list for the simple reason that most of the South African work has been done over the past 7-8 years. Up to now, and there's a lot of experience, capacity, and also interest of well-versed developers in that market. So there's hardly a need for an outlet like Financial Catalyst to support developers in South Africa. The people that we do support are often local developers that have seen the opportunities of grid-connected solar, either in South Africa or on the African continent, in other countries, or through their engagement with European or American or Canadian or Japanese companies. They know it's possible, so they want to introduce it into their own countries, and they get started with concepts, ideas, pre-feasibility work, and at some point, in most cases, they hook up with international developers to get this started. These local developers are often pioneers that have a willingness and appetite for higher risk levels, and at the same time, they're doing this because they see a big future for grid-connected solar in their countries. For the simple reasons already mentioned by Mark, that utilities have got difficulties in supplying reliable, cost-effective power to most of their people. And that is why there is a big gap in the markets for other IPPs to come in, not only solar, but also other technologies, wind, hydro, as well as gas, and in some cases, emergency power to diesel. When do we get involved? Now, in most cases, we don't get involved very, very early on. So when people have an idea, a concept that is valid, but that doesn't mean that it is of interest for us to be involved. We do need to see at least some work done in terms of pre-feasibility, basic financial models, having already spoken to the off-takers for your power purchase agreement, so that you know that you can sell your power that you're going to generate in future at reasonable terms. Because if that's not the case, then what's the point of spending all that time and money in developing any IPP project? So we often go back and say, guys, you've got this beautiful concept, but have you spoken to a potential off-taker, and have you agreed on the basic terms of your sales of power? If that's not in place, then all the other work that follows is not really worthwhile. So we basically take that as one of the first steps. Then often also people that have worked in this area, they've already identified the people that they want to work with in terms of equity. Where must that money come from? But haven't really sat down yet and secured any of that, as well as where would debt come from that goes into their investment. Okay, next slide. Thank you. Now, what is the main barriers that we do see? As mentioned, we're often dealing with smaller developers, or even if it's international developers that come first time into a specific country. And they come from, especially with international developers, they come from areas where solar IPPs or grid-connected solar is, I wouldn't say business as usual, but it's certainly been done before, and they're no longer the pioneers. There's rules and regulations in place on how to do this. Whereas in most countries where you start up new, where you're being the pioneer, that doesn't exist yet. So being a pioneer comes with the headaches that, although you're relatively small, you've got the same requirements and same problems as larger scale projects. So you have to do your environmental impact assessments, you have to do your land acquisition, you have to do your access to finance, you have to do your security issues that relate to connecting to the grid, you have to do all your negotiations, and you have to do it with capacity levels in countries that are often not existing. So talking to the environmental departments, they often don't know how to deal with solar, grid-connected solar, or if you're dealing with lawyers, they don't necessarily know how to do a power purchase agreement for very specific solar projects. Banks, in renewables in general, local banks, although they claim they will or would like to be involved in renewable energy financing, often you see them lacking capacity, certainly lacking any experience in doing this. So if you're one of the first coming with your request for them to be involved in your investment package, it's difficult to deal with them. So you're basically training on the job all these people that left and right are part of your development process. One big issue that we do see as barriers is foreign exchange issues. You come in with dollars or euros as investment. Your sales of electricity, whether it's C&I or it's to the national utilities, is often in local currencies, and you need to find a way of linking that to the movements of international hard currencies like dollars and euros. Another big issue that we do see, certainly in a country like Zimbabwe, for example, is how do you get your dollars out? Even if your revenues are making a decent profit on your investment, which is always, of course, the opportunity that you went for, you still need to make sure that you can get your dollars out of the country, which is a trick, and it's not a trick. It's a big issue that needs attention right from the beginning. Next slide, please. Yep. Okay, an example of the work we're doing in Guinea. It's a portfolio of a number of projects linked together, 3 projects linked together up to 80 megawatts. And as you can see, it's in an area with mining, bauxite-rich province in Guinea. And that is what we often see, that our solar IPP projects are for customers that feel that the local utility is not capable of providing them with the kind of power they would need. And that is where we've got additional power generation coming in through solar, with mining companies taking, in this case in Guinea, the lead on developing this. They would also be guaranteeing the offtake of the solar produced. So you basically got a credit-worthy or a better credit-worthy off-taker than you would have with the national utilities. So the work that we're doing is basically assisting with a funding strategy, now how to get the equity and debt into an 80 megawatt portfolio of solar. And if you want to put money in, one of the first things the financiers would sit with you is, how do you make sure that you will be the one actually generating the power and be able to sell that power for the next 20 years. So you need a concession agreement for the area where you're going to generate, where you're going to put your transmission and distribution system up, if you have to, or link to that to the existing one, and be able to supply for the guaranteed 15 to 20 year period. And as with all the projects that we do spend a lot of time on working on financial modeling. That financial model that we are working with is basically the one that is being accepted and used in the financing world, in the financial community, and we're basically engineering backwards into individual projects to make sure it meets all the requirements from the financiers, so we don't get any nasty surprises when we present our projects to potential financiers. A funding strategy involving structuring of the finances, which is a combination of equity and debt. Obviously, you come in with equity first. That means you need to approach your investors quite early on, so they can also steer the development of the project, and come also in with early stage development capital, which is often needed. You know, we're looking at small developers, local developers, that at a very high risk stage of their development need to spend money on developing the project, getting lawyers in for their PPAs, doing land acquisition. There's a lot of money involved up front that is only getting repaid after successful investments and commissioning and operations of your investment. So development capital often comes from equity that joins early on in the journey of developing these projects. Success so far, we've got a number of invested partners lined up. One of them has passed initial investment approval, which normally means also that they're quite serious about this and they would be coming up with early stage development capital. Then the concession agreement was a large negotiation that took a large number of months, and believe it or not, already before the crisis that we're currently facing globally, most of our work is done over Skype and WhatsApp calls and other means, other digital means. And in this case, we did our negotiations over Skype with the Guinea government, which also for them was a novelty. And I think after that, they are doing this more often now, realizing that they can reach out and be connected to the world without traveling to all these places being necessary anymore. And what is happening now in the world is going to speed that process up as well, I think. The signing of the concession agreement took place at the G20 by the president, so that was quite a successful step forward in developing that potential project. In addition to that, obviously, a full project finance model has been developed, and that is the one that is being discussed with the investors as we speak. Next one, please. So the support for C&I and solar IPPs in Africa is basically a number of things. And Mark already mentioned that we've got a group of about 25. Out of these 25, 6 to 8 of us are based in spread over a number of countries in East, West, and Southern Africa. And the support that you would get when you're being selected as a project that will get support, you'll get a lead advisor. That lead advisor is normally supported by a second advisor. But the most important thing is that we all have access to all our colleagues. And that means I, for example, got a mechanical engineer background specialized in financing, but I'm not specialized in legal issues around PPAs. We've got colleagues doing that. We've got colleagues very specific on financial modeling. We've got colleagues very specific on hydro. We've got colleagues like Mark very specific on solar. So we've got technical expertise, legal expertise, financial expertise, and the lead advisor is your entry point into that pool of expertise. So you're not dealing with 1 or 2 people and only with whatever they know. You're dealing with a group of 25 people that got expertise left, right, and center. So the type of support, project development support, is mostly in reviewing and assisting in cleaning up the business plans. We often see that feasibility studies are not business plans, so making that transition from feasibility study to a business plan, and also making a business plan presentable to the rest of the world, specifically in this case to financiers, by means of pitch decks or information memoranda. When we talk C&I projects, we often need to deal with portfolios. You can't have 150 kilowatt projects presented to a financier. You need to put it into portfolios, you need to aggregate that, and you need to build a business around, a business structure around a portfolio, an aggregated portfolio of C&I projects. Not easy, but something that we've done, and also we found quite a clever way of doing that through financial modeling as well. Then the financial modeling, as mentioned earlier, that is really one of our key instruments that we're working on developing, and basically handing that over to the developer so it can discuss its project with financiers directly. Legal advisory support in finalizing and negotiating PPAs. Also a very important element that we see coming back, certainly with grid connected solar. Then structuring the business prior to equity raises. People always think that their business is worth 4 or 5 times more than it's actually worth, and we are the ones not saying no, but we're putting a reality check on the valuation of companies. We're putting a reality check on the expectations of shares, shareholding when new equity partners come on board. Introduction and guidance to and discussions with financiers. So we introduce to equity and debt. Once we've secured an equity investor, jointly we will look for debt financing, and we will introduce and guide that process of discussions up to the point of having loan and shareholder agreements prepared and signed between the parties. The bottom line is that from the beginning, once we have a lead advisor linked up with a developer, we need and we will build a trusted relationship with that developer so that the developer feels comfortable sharing his ideas, his vision, but also the issues that are not going that smooth with us, so we can work on it prior to actually opening up to the financial community and having your dirty laundry shared with them. We try to find out what is the dirty laundry, what is the problems that we need to deal with internally. We are being seen as part of the development team, and we get out only when it starts making sense and we're not embarrassing anyone. We're having a fairly good chance of success in securing funding for our projects. That's what we do. And I think it's up to you again, Javier, after this.
Yes, thank you, Ed. Just as the last slide. Yes, thank you. So yeah, basically just to complement what you were saying, Ed, I think it really comes down the selection process to boils down to whether you have a viable business case, whether we can add value to that, and whether we can link you to the right type of finance now. So here is the link that I was speaking about earlier. This is the link where you can submit your application if you're interested in receiving support from the GET.invest Finance Catalyst. And as Ad was saying, your information will always be treated confidentially. We have confidentiality agreements, NDAs, that are signed by both parties at the time that the advisory for agreement of services is signed. And just basically a repeat of what I said earlier. Applications are evaluated by 2 individual experts, and we evaluate applications in rounds that last 2 to 3 weeks. So yeah, for that, I finished with our presentation, and I'll hand over to you, Matej, for the questions. Thank you.
Yes, thank you very much, Javier, and thanks a lot to all 3 experts, Javier, Mark, and Ed, for the great overview presentation, walking us through the different services and approaches of the Finance Catalyst. So indeed, in the meantime, we've already started receiving a lot of questions, which signals to me that there is a lot of interest indeed. A great sign. So on this slide, you can see how you can use the control panel if you would like to ask questions. So please feel free. I would like to to encourage all participants to ask your questions using the control panel. And so in my role as moderator, I will read the questions out. So I will try to group the questions because we have a lot. And so the first group of questions that I would like to start with would probably be aimed at Javier, because they are more around the eligibility criteria when it comes to participating and benefiting from the services of the Finance Catalyst. So some of the questions are related to geographical areas that you cover. So one specific question is whether projects in North Africa, such as Egypt and Tunisia, are eligible. And then another question, which maybe you could answer in the same round, Javier, is about whether project developers outside of Africa, such as from the Middle East, are eligible to participate in or benefit from the Finance Catalyst's services if they develop projects in Africa.
Thank you, Matej. Thank you for those questions. For the first one, I do want to emphasize that we're talking about sub-Saharan Africa, so Northern Africa is not in our geographical scope, at least not yet. But we can, and this answers the second question, we can have developers from the Middle East if they're developing projects in sub-Saharan Africa. That is not an issue. Again, the eligibility criteria can be found on our website, and this is very well detailed there, which clearly it states that applicants must be situated so their projects must be situated in sub-Saharan Africa, yeah, or in the Caribbean for that reason, as we recently started operating there.
Okay, thank you very much, Javier. And then so I think this is quite clear indeed. We're talking about sub-Saharan Africa, and if you would like to learn more and have more details about the eligibility, geographical and other types of eligibility criteria, including the scope, whether, for example, microgrids are in the scope, which they are, but in today's webinar we're talking about C&I and IPP projects, then go on the GET.invest website and you will find all the information. So now I would propose to move on to the second bulk or round of questions, which is around more around contents and approaches you take in order to facilitate projects in sub-Saharan Africa. So Mark and Ed, you highlighted the main challenges. It was very useful, and also some of your approaches, how you are supporting project developers to address these challenges in Africa, challenges including off-taker, credit worthiness, currency risk, etc. But it would be many of the participants are interested in learning a bit more about your approaches. How specifically can you help to manage these types of external risks as the Finance Catalyst?
Shall I give it a go, Mark?
Go ahead, Ed.
Okay. Credit worthiness and foreign exchange issues. Let me just, because I'm working on both sides, C&I and IPP Solar. I'm recently been involved in a large project in Nigeria on C&I, basically taking out diesel gensets and putting solar and battery backup onto telecom towers, so a portfolio of almost 400 telecom towers. And one of the main issues that we had was in the power purchase agreement, where first of all, the power purchase agreement was only for 6 years, which is often not long enough to repay any investments. So we managed to get that up to 12 years. And the other main issue was revenues to be paid in US dollars or linked to the US dollar. And also that we managed to negotiate and take it out of the original PPA and negotiate that revenue streams would be linked to the US dollar. So that was one way of dealing with and supporting the developer in getting the power purchase agreement, one that becomes one that is of interest to basically the revenue stream of that investment. Second one is the repatriation of US dollars. Getting that figure it out as soon as possible in your process. Is it possible in your country? And what are the rules and regulations around repatriation of hard currency? In Nigeria, there's recently, only since a few years, you can get your dollars quite easily out of the country again. That was possible in the 80s and the 90s quite easily. They closed it up for a number of years, but it's back again. A country like Zimbabwe has got different issues where it's difficult to get your dollars out. And there we're dealing with a solar IPP where a company is basically working with one of the companies working in the gold mines. And instead of paying us directly in Zimbabwe, paying the director in Zimbabwe, the agreement is going to be around payments will be made where the gold is being processed, which is in Johannesburg, South Africa. So the gold is being exported. That is not a problem for Zimbabwe. The added value on that product, basically turning the raw material into gold, is done in Joburg. That is where the payment for the power is made as well. So based, and from South Africa, you can repatriate your dollars back to where they came from. So we have to look for opportunities that are not always that easy to spot from the beginning, but we do highlight that as one of the main issues right in the beginning. And if we can't find solutions to it, the advice is often either you delay until the problem is resolved, or you step away from this project and look for other opportunities.
Thank you, Ad. Would you like to add anything, Mark, on this?
The only thing I would add is the helping on the pioneer status and being an interface between client and the provider of services, because in countries like Uganda, where C&I solar is quite new, sometimes we can serve as sit beside the provider of service and the client, and as an independent player, we can help them get through their questions and help them make the sale in a more help them make the sale to the client, and back up the provider. So we can help seal the relationship between the customer and the client.
Thanks a lot, Ad and Mark. So I would move ahead with another question, perhaps also aimed at Javier, but any of you, please feel free to answer to it. So, and I think this is a really important question to clarify, which is whether all companies, regardless of their size, large and small, that are developing projects in countries in the target region are eligible to apply, and whether there are fees involved.
Maybe I'll take that one. Thanks, Mate. So basically, it's about the size of your project. So if you look at our eligibility criteria, it depends really on if your project or business. The first eligibility criteria talks about this, has to have a cumulative generation capacity between 0.5 and 50 megawatts, or an aggregate investment in the range of 250,000 to 70 million euros. So that's basically the ticket size that our facility works with. So I hope that answers the question.
I think the question, Javier, the question was more aimed at the size of the company, the project developer.
Well, the size of the company doesn't matter. What it matters is the investment that they're looking for, because that's the ticket size that we'll work with. So basically, if they're looking for if they have a project from 250,000 euros to 70 million euros, and within that range, we can help them with that. Yeah. So,
yes, thank you for the clarification.
Okay. So that was the first question, and your second question was, Mate, can you remind me?
The second part of the question was whether there are fees involved, fees that need to be borne by the project developer.
No. So yeah, that's a good question. No, our support is free of service. We are a donor-funded program. The facility is donor-funded, but it is for that reason that we have quite a thorough application process, where we really have to select who we can support. No, but the service that we offer are free of charge for the developers.
Thank you for the clarification. So the next question is around the way you select or you advise project developers to select the best financing or lending options. And related to this question is also whether you work with export credit agencies. So one of the participants works together with the United States Exim Bank, and they would be interested in whether you're able to work with that.
Let me give it a first go. This is Ad. Having worked for Power Africa, during my career for a number of years, the export bank, the American Export Bank, was one of the financial institutions that we could work with, as well as OPIC. We would definitely reach out to them as well. We don't exclusively focus on European financing or European equipment or engineering or consulting firms or lawyers or whatever it may be. We are basically looking at what is out there that makes most sense for the investment into that project. And if the Exim Bank has got an interest in, let's say, Nigeria, large-scale solar, we would definitely sit down and introduce the project to Exim Bank, as well as to OPIC, as well as to Development Bank, as well as to equity funds from the States or from Europe or anywhere else. So that's we tend to work a lot with the DFIs, the development finance institutions, either directly as debt providers or their money put away into private equity funds, which we see a lot of them in Nairobi and Johannesburg. And with that money, we basically finance the higher risk projects. If the projects are good quality projects with good returns, there's also an interest of more commercial outlets, and Exim Bank would be a very good liaison between American companies, American finance, and opportunities in the African continent.
Thank you. Let's move on to another question, which is more aimed at your internal benchmarks or benchmarks. The parameters of the financing or projects up from which you consider projects bankable. So, what's the typical IRR benchmark below which you don't consider projects bankable or attractive, or how do you evaluate project proposals or financing opportunities, and also what debt characteristics do you consider as bankable regarding interest rates and tenors?
I'll jump in. I don't think we have strict rules on IRRs and how the project looks. What we look at is two things. Is it a viable business, and does the person who's asking for assistance know what they want from us? Those are the two things that really, Ad, you can jump in on this, but those are we want a viable business plan, a good pitch deck, a unique project or project approach, and we want the people who are applying to have a good idea of what they want from us. We're not magicians. We're not going to write your proposal for you. We're not going to prepare your ideas for you. So it needs to be a good business idea, and that comes with all of the financial indicators that you mentioned: IRR, debt, equity, all of these things. So we're not going to come in with preset ideas.
Let me add to that, Mark. When you say viable business, actually, having an IRR which is in dollar terms anywhere between 12 to 15% on the overall project, and I've noticed that when we're working with equity funds, depending a little bit on the country, they're looking at a 15 to 20% range on return on equity, and that seems to be high. But believe it or not, there's quite a few projects out there that can meet that kind of return expectations. As for depth and equity, we're looking at gearing anywhere from 20, 30, 40% equity, and then obviously the remainder being debt. We try to shy away from putting grants into the overall investment package. If grants are to be used, then we would like to see that coming in very early on in the development of the projects, where the money, the high risk money, is most needed. And if that grant needs to be converted to part of a loan later on, fine. But we rather not see the grant into an investment package. As for the tenor of loans, 5, 6 years is definitely not enough. And if local banks are often looking at very short periods of tenure, that's not enough for infrastructure projects like solar IPPs and even C&I. We're looking definitely at 10, 12 years as a minimum. Interest rates in dollar terms would be 8 to 10%. That's what projects could actually carry. If it's more than that, it's going to be problematic.
Okay, so thank you very much, Mark and Ed and Javier, for this very informative discussion. I'm afraid we're at the end of our time, and indeed there are some open questions that we didn't manage to answer today, but I would like to invite the participants to, first of all, to check out GET.invest's website for more information, and also please feel free to get in touch with Mark, Ed, and Javier for more information about possibilities to get the GET.invest Finance Catalyst support. And so as a final word, if we go to the next slide, I would like to highlight that this was the first webinar of SolarPower Europe's newly launched Shine On digital series. And so tomorrow we will proceed, we will organize another webinar on the impact of the COVID-19 crisis on the European solar sector. And in the coming weeks, we will have another series of webinars about a variety of topics. And we hope to organize other webinars in the context and in collaboration with GET.invest soon again. So on this slide, you can see an overview of our upcoming webinars. So with this, I would like to thank very much again for our guests, Javier, Ed, and Mark. I believe it was a very insightful and interesting presentation and discussion. And we look forward to cooperating with GET.invest. So thank you again also to the participants for attending this webinar. You will receive a short email after this webinar with the recording and the presentations. I wish you a good day.